It's algorithms. All these numbers have been pre-programmed. And as soon as the press release comes out, an algorithm, computer, effectively immediately word scans and in an instant, and by instant, I mean literally a split second, looks for all of the numbers associated with all those words and matches the numbers with the pre-program. It happens so fast that you can't possibly get a trade off. And then what happens is there's the conference call later that night, and then analysts rerun their numbers. And the next morning, analysts come into the portfolio manager's office and they have a talk about it. Maybe there's a meeting at 10 or 11, and everyone's sitting around a table. That's when the conversation happens. And then there's some of these high beta stocks, like the ones that I trade. The growth stocks are more volatile. That's what's driving markets. And I think investors need to be aware of that dynamic. They can get depressed by it, or they can just acknowledge it and see it as an opportunity to, on occasion, actually pick up a stock that shouldn't have traded down as much as it did. That's what's driving the volatility. It's here to stay. And yes, I think the current sell-off has bottomed. And yes, I think we will rally to new highs. And yes, I think we will see more sell-offs this year, maybe back down to where we are again, and it'll retest. And people say, oh my gosh, is it over? And we'll say, no, we're not over. It's just markets being markets.